How's it going, guys? We're going to take a quick look at the charts, and I want to discuss a few things today. And first, we're going to discuss the weekly chart, Bitcoin, but I also want to emphasize a little bit about entries and how to handle sort of this part of the cycle, because in reality, what we are seeing as this part of the cycle is actually kind of a bear market, right? And by bear market, I mean several months of very harsh downtrend and zero correlation with equities and the dollar. Okay, so I want to use a few different charts, and let's start with the Fed because it's a great example of this, right? So there's two things. Okay, so one is that the buy signal that came in on Fed is actually pretty high up, right? So it's not a buy signal in terms of you have to buy, right? It's a buy signal, meaning what is going on within the chart. So understanding the system, okay, and understanding the indicators gives a better understanding of how to proceed and how to sort of execute what we are seeing on the chart. So the bomb, the actual signal, right, is this candle, okay, because it's engulfing several candles. Now, after that, we engulfed it back, right? And that was on a lot of coins. What happened during that exact level is this one, okay? So we had a week into sort of a demand of weak books, right? At the bottom there, okay? And we had a potential reaction to reclaim and start moving higher. Instead, this became a resistance, okay? And we are moving lower. But what happens when we move lower from this price point to this price point is that it's an extreme price move. And when we're having these extreme price moves, you can see that we're getting this green hill, right? And this green hill represent price moving away in terms of Bollinger Bands, EMA, and etc. Okay, in reality, it just means that we're going extreme against the average price. What average price is that if I would not put on, let's use an EMA as an example. So let's go to indicators. Let's put on EMA. Let's see. Give me 1 second. EMA. Okay. So in terms of average, this is a 9. Sorry, you can use a 20, right? Or you can use 50, okay, depending on whatever you represent as the average price, okay? So if you're going to use now the 50 of it, right, you can even use 100, right, but that's getting too far. So what 100 means is the average past 50 candles, right? So the lower the number, the closer you're getting to price. The higher the number, the further away you're getting away from price, right? So if I put on 1 on it, right, it's exact same as price action, right? It's basically 1-on-1 with price action. And then it basically just becomes a line chart. If you now put it on the 50, right, to get sort of an average price of the overall trend, you can see how it moves. So when we are pumping extremely away from price, right, so this area, and then you're getting parabolic, we're moving extremely away. So that means that if I would put on now this in terms of sell signal, you would see a large sell signal right there, right, on the indicator. But we don't have sell signals on, we only have buy signals on. So when price is now selling away, if this is the average price, the further you move away, right, the larger this becomes, okay? That's what it represents. So the further away you the more extreme you're getting away from average price, the higher is the chance to get a price response, okay? So now let's use a few things here just to build sort of the edge and the understanding of how to execute, right? So you're having levels, okay? Levels are basically consolidations, okay? Then you're having PA reversal, okay? PA reversal are bomb triangles, okay? And then you're having green hills, which is basically what we can call it trending away from average price, okay? So that's just to get an understanding. When we have these three conditions met, okay, that's the buy signal, okay? So the more of them you're getting at the same price region, the higher the chance to get a response, okay? And the higher the time frame, the stronger the response, okay? And you're also having this smart money proxy, which is this straight green line behind it, okay? And that's basically often you see that come in, and then you get the signals, all right? So what happens now is that to get to print, if you understand the indicators, it means that the bomb or the triangles that you're seeing, these are based on price action, okay? So to get a bomb or a triangle, price needs to move like this, okay? Like lower. When you're getting price down, and once you get bullish candles once you close a bullish candle, okay, and you basically engulf with momentum the previous one, this then gives a signal, okay? Then that gives a bomb signal. For that to be valid to execute on, you also want to have the more extreme the green hill. It means that the momentum against, or the trending momentum, is extremely high, okay? That often represents a bottom. So now, to get the proper buy signal for Fed, you would need to get a signal. So if this is the candle that we are seeing, to see a buy signal, it means that what? You need to engulf and have a candle to close above it, okay? You can't get a buy signal now without closing above it. So for that to happen, okay, there are three things. You need then either you want 2-3 days where you're getting smaller body candles, okay, and then you get one strong candle, then that will be a buy signal, the larger candle. When you're having that in combination with this green hill, that's when you want to execute, okay? But you also would like, if you want to have, sort of the highest form of buy signal, it would be around levels of interest, right? So levels of interest will then be consolidations. So if you're going to point out consolidations, right? So this is a consolidation, okay, that holds liquidity. This was a level that was of interest, okay? Regardless, it doesn't mean, we don't have to be perfect of each and every level that we go to, right? You have to be able to be wrong a few times in trading. If you can't be wrong, you are going to lose a lot of money, okay? So Fed is performing the worst, but these are the levels, right, you want to be executing on, and these are the levels you want to see the signal come in, right? So, and regardless, even if you don't see that signal, you can see that one other thing I want to show you is that if you look at this wick, this larger wick that came below where we actually had the candle of that week was a 20% sell-off, right? From that low, from that high. It was even more actually. From the weekly open, it was 30% weekly candle. From that 30% weekly candle, which probably looked the absolute worst, we had a 65% up move. Okay, so understand. So even if this looks absolutely horrendous, it can turn into something extremely bullish, right? It doesn't mean that you have to knife catch it. Now, secondly, is that we're having the merge. I just want to mention this when it comes to Fed. We're having the merge going on. So people are not really willing to hold it. A lot of, I think on Bybit, I'm not certain because I haven't looked, but I think also on Bybit, they don't have, or Meekan told me we don't have leverage trading on Fed. They removed it because they're going to merge, right? So and I'm not sure. I haven't read about what they're going to do with the coins or how they're going to do that, right? So if you're holding Fed, I don't know what will happen if they're going to just equally transfer the amount, or if you just keep it on the spot exchange, they will just automatically move it into the new ticker. I'm not sure how they will do that, but that means that there's lack of liquidity, okay, in that. That's why we're actually getting this extreme sell-off. So that means that, in my opinion, this can be extremely good buy, okay, because people are not trading it. So we're going extremely lower, and once the merge gets confirmed, I'm pretty certain it will perform very well, okay? So that's just overall. So I hope you understand sort of how the system works. Now, if you go into the Bitcoin chart, we're going to take a look at a few things here, okay? So On a weekly basis, arguably this doesn't look the best. Let's see. We haven't had a proper sell signal on the weekly of this structure, which is I find quite interesting, to be honest. In terms of seasonality as well, we marked the top around 3rd of June. Okay, you can see this on the seasonality indicator, and we're potentially going to downtrend into mid-July. Okay, potentially, or we can also have a late of June also going to be movement downwards, right? And then we can move from July into August, but from August all the way in towards end of September is usually bad months. Okay, so seasonality now, is not on our side, to be honest. But that doesn't mean that altcoins cannot run. Okay, and I hope people have experienced this in the past. There will be narratives that really push them, because I think we can move down and start moving sideways, liquidity compressed, and you're going to see a lot of coins starting to move, right? We're starting to see a bit of selling, hedging here in the COT data. Okay, so you want to see buying coming in, and we haven't seen that. We actually saw that during the top. Okay, so there was some people actually buying the Pico top, and these are actually banks. These are smart money, and people were actually selling a lot here, and they're starting buying back. Okay, and this is actually smart money, and that's interesting in my opinion. So if you're going now into the daily here, you can see that we were trying to reverse here on the daily, but we failed, right? We're still having this gap around 64,000, which is of interest. So we just really have to see. So this, I think this is sort of the main chart at the moment, in my opinion, that we're going to watch. There's so much that can go on. I just, sorry, not that one. I think we should just use sort of this region just to understand that we just expect something to happen within this level. We can even make it slightly include current PA as well, of course, but around these levels we should see something should happen, right? Even if you get an extreme wick, something should happen, right? So in a worst case scenario, even if you do get the wick like this, still should be some kind of a reaction, right? Something like that, if we get a liquidation cascade. But inside this, we should start to see something to form, even though the weekly doesn't look too good at the moment. In terms of the 8-hour chart, we are seeing a lot of buy signal are coming in here. Okay, a lot of buy signal coming, but we can still move lower, right? It just means that most of the time when we're seeing this come, we usually get some kind of a response in price. This is the 4-hour. The 8-hour starting to get the green hill. We haven't had any buy signal yet on the 8-hour, which is pretty accurate on Bitcoin. So we're going to see how this unfolds, right? Because we're sitting on support, and we can gap slip here into some of these lower numbers, right? So the point is that we don't have anything, to put your hat on, because the structure that we are developing is like this. If this gives in, that's the extension. Okay, that's the extension. If it doesn't give in, that's sort of the bottom, and you're going higher. Okay, but you usually take some kind of a price action here around these levels to see what happens. So that's why I use the signals, because they will represent what I'm looking for, right? Because in terms of price action, the signals, they will show the same. They will give the buy signals the moment we get the PA, and I can reassess and then look at price once I get it. Okay, and even if the system is wrong this time, I don't care, because it's been right many times in the past, right? So you want to look at that. So the same goes here for Rune. So if you're going to start marking down the past performance, you can see here that we're having the buy signal. The signal came a bit early, right? You can see because we had candlestick right there, but you can also see that we didn't have the green hill, right? So we need to have the hill as well. So once you got this in towards the extreme part of hill, meaning above 60, at least above 50, 60, 70, you know, so let's just make this as a price region, okay, just to make it a bit more clear. So this is sort of the peak, okay, and you can see if you take this into give me 1 second. Okay, so this is the level that gave the signal. Okay, so we did have a 24% price drop from the first signal towards the peak of the signal, right? But from that low, right? So from that signal, we also had a 175% price move. When we had the green hill at the lows there with a very weak buy signal, right? Because you can see here we had 1, 2, 3, 4, 5, 6 reversal in terms of price. So that means that we were really trying to reverse in terms of price action. On this price region, we only had 1, okay? So I think I'm not going to actually include the first there because, you know, we can, but I don't think it's worth it. I think the peak there is sort of, but we can include it just for the sake of video. Okay, and then we can use the peak right there. Okay, then we put that in a hot box. Okay, so this is sort of the levels, okay, that gave the signal. You know, from the top part we had a 30%, 36% price move. From the bottom we had a 64% price move. Okay, if you look into the past, we had a small green hill. If you use the first one right there, okay, previously, just want to point this, I just want to understand how this works. Right? So let's use the second signal because that was the one that was valid. Then you can have, this is where the divergence come in with the last potential signal, okay? So let's use this one. We put that in a hot box to the bottom. We take this away, okay? So from the first signal of potential reversal in price, we had a 36% price drop. From that 36% price drop, we had 700% price move up, okay? And then from to the absolute top, we had 1,300% move to the upside, okay? So, you know, you can do that all the time, right? So you're seeing here, we're having the first, this failed, this had a 2x, okay? We had a price move around at least 50%, okay? And then this one didn't turn out so good. It tried and it failed, right? And we had a 13% price move up. Maybe we could put something into break even at that point, okay? Then you had the next signal here. You had 45% price move, right? So it took you probably 5, 6, 7 attempts, okay? And then you had 1,300% price move, okay? And then after that, you could have just bid every single time, okay? So since that's the case, I don't really care about a 6% price move, okay? I just wait here to see price stabilize, trying to get in, and when you nail it, right? So it means that once this hits the potential bottom, we know that at least we should get a 200 or 100% price move from this, okay? This is one good example. You know, we can use that basically with every single coin, okay? So you can do that with this is the 3-day on FTM. You can use the daily with this in particular. Every time we're starting to get any kind of green momentum, it's the Pico bottom, okay? So from this low you had 3x, right? Then you had some green coming in around these levels. Just do the worst case. We had a 40% price move. We're starting to get it again, okay? We're starting to get it from this one, right? From this absolute bottom. Did I just say it? I don't remember. Come on. No, it was 600%. Okay, so from this, it was a small loser, but we did actually get a 60% bounce, right? 60% bounce. From this one as well, these signals, you had maybe 39% drawdown, you know, if you want to call it that, and then you had another 3x. Okay, I just want to point out that these, how this indicator works, right? You can't never nail the peak or bottom. You just understand that when you're getting to the point where you keep getting these repeated levels of buy signals, you are going to get these moves to the upside. Okay, the more extreme they are, the better. Okay, and you're seeing the same here. We're coming in. So the previous time we had it for Engine Coin, we had 600% price move. Okay, and you can go to the past here. From this, look at this, is a pretty beautiful signal, right? Because in terms of PA, very small candles. So this is the perfect one. Okay, so let me just shape it up for you. I know maybe you don't care about it, but the thing is that when the heel goes like this, okay, and you're having at the bottom, at the peak, you're having both of the signal, and just right before the big, you're having here the green smart money starting to buy. When you're having this, is the perfect signal. Okay, this is the perfect signal because you have everything compressed at the same place. Okay, you know, it's not that we're into, you know, multiple. You can see here that you're having a larger one, you know, with just every few other days you're getting a signal. In this instance, it's everything at once with not a lot of noise in between on any side. Okay, so from that price move, you can see what happened, right? From that move, you had 800% move to the upside. Okay, and you can see it. So here you had massive green move, COT data with a small buy signal, 2x. All right, 2x. Previously here you had what? You're having the green hill, you're having some bumps here, but you don't have the green hill, right? So you want to wait to get a peak. Once you get the peak, green hill above 90%, 250% price move, like, and you can see that, right? It works. This is a very good indicator, and it's a very robust system, but you can't expect it to give the peak or bottom every single time when you feel like it. Okay, it doesn't work like that. If it worked like that, I will probably having my own hedge fund, you know, living in New York, not being on Twitter, right? That's just not how it works. So these are just some ideas. I think overall market potentially looking pretty good. You can see here that we had, this is on the 1 hour, pretty nice signals. Look at the bottom here with the bomb reversal in price, beautiful. Okay, so essentially what you want in general, you want to get the best possible signal. You want price to reverse, right? So the way price works in that sense is that you're having sideways, okay, something like that, and then when price nukes like this, and then you're getting a reversal like this, okay, and this bottom you're having signals, okay. It just means that the bars, so let me take that away, let me take it. So if these are the bars, okay, compressed price action, and then you're getting sort of longer extended moves, okay, and then once you're moving to the bottom, you start getting smaller candles again, okay, and then you're getting one larger or two larger candles, okay, which are reversing the multiple candles previously. Then essentially we usually view this as a reversal in price, and that's also a good long signal. You often get that as a trigger as well. And what happens that is then it's starting to get extension away from that bottom. Okay, that's very good. But often you should wait to get those candles, and then you bid that pretty hard instead of knife catching. Okay, as it was for Fed. Okay, so you had it. So in the sense, as a pure technical, it wasn't a bad trade. Okay, it wasn't too bad. I think this is performing extremely bad due that there is no liquidity in the market due to the merge that is happening. One last look at NEAR before I end this video, because I'm in it and I want to take a look. Okay, so having a drawdown, the size is not too bad, even though it is a decent drawdown. But you can look here. If you look at the signals, right? So if you look at the past now, on this is the 8 hour. Okay, so previously we had this candle formation. You had a larger signal, right? So it was 95%, 3 buy signals, a little bit of smart money, and it was at 96%. From that level, we rallied 255%. From the green hill here with a few signals, if you use just the average, we rallied 42%. From the absolute bottom, 80%. Okay, and now you're getting the same. You can look to the past, the previous time here, you're having a lot of good ones, right? This is a pretty strong buy signal, right? So you're having 1, 2, 3, 4, 5, 6, 7 buy signals, 8 buy signals at the same place, and also with pretty extreme green hill. Okay, so from that price point, you're having 372 price move. Okay, but previously, before that, you only had small. But even with this small, these levels, you usually had some kind of a bounce, or at least sideways price action. Okay, most of the time. Even here, you can see this was pretty extreme buy signal. You had at least a 30% price move. Here you had a good size buy signal, 130. Okay, but there will be times, right? So here are some times when you are in a strong downtrend, it might actually trigger some buy signals, and instead, you're going for a larger move to the downside, right? So regardless, you have to manage sort of risk and understand where you are within sort of the cycle. Because if I take you now to this price point, right, where we're starting to get the majority of the signals, even though we actually went quite a lot lower. If I take this to the weekly, okay, if you go now to the weekly, it's actually just the FTM nuke that did this, right? So you had a massive sell-off. I think, I'm not sure. Let me check. Yeah, it's the FTM. So, right, and you also had this consolidation, and I posted this on Twitter. This level was really good. It was technically good. All right. So we will see, okay, how things unfold in terms of PA now. The thing that is happening here, you can see quite clearly. We're having the issue here where we're having the accumulation price comes, blah blah blah, and we created a top, and now we are like right there, and we have a lot of potential move here, a gap that can be filled, right? If you're getting now a few months of bear market, that means that you just have to be sort of careful with the win and losses and everything, right? You have to be careful and not take big losses here until you actually get the large buy signals, because what we are in reality trading, just so people quite often lose the plot, is that we are actually trading. This is what we're trading. Okay, and this is the seasonality in terms of Bitcoin. Okay, so when we want to go big, right, it's in October. Okay, so until that, we're just trying to survive and potentially build the account slightly better. But you can see here that if I mark the top there, okay, and then we mark the bottom. Let's use this one. You can see that we have a potentially downtrend until that price point, and then we're having another downtrend from August to October here, right, which we should be careful. So if you put that into time perspective, okay, and we use these here as a potential place to create a bottom, you take this away. And you look at it on a weekly basis, even on a 3-day, just to feel sort of the time difference here. You be having actually quite a lot of candles here to go sideways and potentially form there. And if you take that and you put that on, for example, near. Sorry, give me 1 second. I just need to find the dates here. So we're having August, copy, paste, October, right? So within that time period, we can do a lot of price action. So you just have to be slightly not worried, but you can get easily something like this, right? And that actually we need a lot more time than that as well. So that's a bit surprising. So we can do something like this. Let's see. Something like that. Let's use some more PA here. Let's use these ones. So we can easily start. So this is a potential roadmap. Let's see, December. Yeah, this is a bit too extreme. Let's do something like that as a good example, just in terms of seasonality, what we can expect, right? So you can get, a lot of fares sideways, price action, some candles, and in terms of seasonality, it will look like this in amount of time, and I think that looks pretty good. So that's something to be very aware of. Okay, guys. So I think enough with the discussion today, and let's see how things are starting to unfold. Okay, guys. Let's speak later. Peace out.